What is up, future CPAs? Welcome to this explainer. Look, if you're a Gen Z accountancy student currently staring down the barrel of the LECPA syllabus, you are in exactly the right place. Today, we're diving deep into local taxation, but listen, we are not just going to sit here and memorize textbook definitions. No way. We're going to explicitly hack your memory so you retain this information not just for tomorrow's quiz, but for the next 3 years, all the way into that board exam room. Grab your coffee, get focused, and let's dive right in.
Okay, picture this scenario. If your head office is in Pasig City, but your actual manufacturing plant is out in Taytay, Rizal, where exactly do you pay your local business tax? Do you pay it all to Pasig? All to Taytay? Do you split it somehow? This is a classic board exam brain teaser pulled right from our source material. I want you to hold on to this tension in your mind right now. Don't try to guess just yet. This question is going to trigger your active recall, and by the end of this study session, you'll literally be able to solve it in your sleep.
So, to make this stick, think of your brain as a filing cabinet. We're setting up 5 distinct mental file folders today. Folder 1, Power and Fundamental Principles. 2, the ordinance process. 3, allocation by LGU level. 4, local business tax Situs. And 5, special rules and retirement. Setting up these folders right now is going to make recalling this stuff during the exam completely effortless.
All right, opening up folder number 1, Power and Fundamental Principles.
Before we can even calculate a single peso of tax, we really need to understand where local government units, or LGUs, actually get their power to take our money. Here's the thing. They do not have inherent power to tax. It's a delegated power. It comes directly from the Constitution and Republic Act 7460, which you probably know as the Local Government Code of 1991. But hey, here is the highly testable keyword I need you to mentally highlight right this second. Sanguinian. The power to impose a tax, fee, or charge is exercised exclusively by the Sanguinian, the local legislative council. Not the mayor, not the governor, the Sanguinian. They do it through an appropriate tax ordinance. Do not let the examiners trick you on that one.
Now treat this like your critical mental checklist. There are 6 non-negotiable fundamental principles governing local taxation. First up, uniformity. Taxes have to be uniform within the local unit. Second, equity. It's got to be based on the taxpayer's ability to pay. Third, it must be for a public purpose. Fourth is autonomy, meaning the revenue must strictly benefit the LGU levying the tax. Fifth, progressivity. And sixth, territoriality, which is our Situs rule, basically meaning an LGU cannot tax properties or persons outside its territorial jurisdiction. Lock these 6 in, guys. They form the absolute bedrock of everything else we're going to talk about.
Moving on to folder number 2, the ordinance process.
So, we know the Sanguinian has the power, right? But they can't just wake up and demand taxes overnight. There are strict procedural hoops to jump through. Here's your chronological timeline. Step 1, mandatory public hearings. A tax ordinance cannot be enacted without prior public consultation. Step 2, the actual enactment by the Sanguinian. And Step 3, listen closely because this is a classic true or false trap on the CPA exam. Rate adjustments. LGUs can generally only adjust local tax rates a maximum of once every 5 years. Literally engrave that in your brain, once every 5 years.
Now let me throw a bit of a curveball at you. What happens to the LGU's power if the national government looks at a specific area, say a brand new type of business, and says, hey, we're going to start taxing this nationally? Pause for a beat, see if you can retrieve the answer from your memory.
Well, if you said the LGU loses the power, you hit the nail on the head. This is known in the law as the Doctrine of Preemption. It's the implied withholding of the local government's delegated power to tax a field when the national government elects to tax that exact same area. So the crucial takeaway here is simple. The national government is the big boss. If they step into a tax field, they get the right of way, and the LGU has to take a step back.
Before we shut this second folder, here is an absolute non-negotiable rule that examiners just love to test. The collection of local taxes, fees, and charges shall in no case be delegated to any private person. It absolutely must be done by the provincial, city, municipal, or barangay treasurer or their authorized deputies. No private debt collectors allowed for local taxes, period. Don't fall for any tricky scenario that says otherwise.
All right, popping open our third and probably heaviest folder, allocation by LGU level.
Keep in mind, not all local governments are created equal. Who exactly gets to tax what? I want you to take a mental screenshot of this matrix right now. It is your ultimate cheat sheet. Notice the stark contrast in jurisdiction as we move vertically down the list. Provinces, they handle things like the transfer of real property, professional tax, and amusement tax. Municipalities, on the other hand, hold the golden goose, the local business tax, or LBT, along with fishery privileges. Now look at cities. Cities are absolute powerhouses. They generally exercise the taxing powers of both a province and a municipality. Finally, barangays are at the grassroots level, primarily taxing small stores and retailers that fall below a very specific gross sales threshold.
Speaking of the province, let's call out a highly testable limit, 300 pesos. This right here is the absolute cap for the professional tax levied by provinces. So when you become a practicing CPA in a few years, this is what you'll pay. And remember, the law explicitly states that the rate of this professional tax has to be uniform across both the city and the province. No LGU can charge more than this 300 peso ceiling.
Now, a second ago, I called cities powerhouses. Well, here's exactly why. This 50% figure represents a massive advantage for cities. Under the law, a city can actually levy taxes at rates that exceed the maximum rates allowed for provinces or municipalities by up to 50%. There are exceptions, of course, namely the professional tax we just talked about and the amusement tax, but for most other things, cities can basically hike that ceiling up by half.
Dropping down to the barangay level, things get very specific, and I promise you, examiners will try to trip you up on these numbers. Barangays have the exclusive power to tax stores and retailers, but only if their gross sales fall below these thresholds. Notice the strict separation here. If the barangay is located in a city, they tax retailers with gross sales of 50,000 pesos or less. But if the barangay is in a municipality, that threshold drops to 30,000 pesos or less. And the rate? It cannot exceed 1%. Do not mix up the 50K and the 30K figures. City barangays get the higher threshold. Lock it in.
Next up, Folder 4, Local Business Tax Situs.
You guys are doing great. Now, this is probably the most analytically tricky part of the rules, so really put your thinking caps on. Let's establish the foundational rule of territoriality. Where does the sale actually happen? If a business has a branch, a sales outlet, or a warehouse, all sales made there are recorded and taxed in the LGU where that branch or warehouse is located. Simple enough, right? If there is no branch and everything operates out of a main hub, then default to the principal office. All sales are recorded and taxed there.
But let's bring back that tension from our opening brain teaser. What if your principal office is taking all the orders and recording all the sales, but your actual factory or plant, the place where the blood, sweat, and tears go into making the product, is operating in a completely different LGU? Who deserves the tax money? Is it Pasig, where the paperwork is done, or Taytay, where the factory is causing wear and tear on the local roads?
Well, here is your answer, and it is a brilliant compromise by the law. It's called the 30/70 allocation rule. If sales are recorded at the principal office, but a factory or plant is maintained elsewhere, the sales are split for tax purposes. The LGU of the principal office gets to tax 30% of the sales. Meanwhile, the LGU hosting the factory or plant gets the lion's share. They get to tax 70% of those sales. So going back to our teaser, Pasig gets to tax 30% and Taytay gets to tax the 70%. Memorize that split. Finally, opening our last folder, Special Rules in Retirement.
This is where we catch those edge cases that examiners use to separate the prepared students from the unprepared ones. Look at this 50% number again. We know cities can exceed municipal tax ceilings by up to 50%, right? But here is a super important special rule. Municipalities within the Metropolitan Manila area, or MMA, get a special premium. Just like cities, these specific MMA municipalities can also levy taxes at rates exceeding standard municipal caps by up to 50%. They're heavily urbanized, so the law grants them that extra financial muscle.
And to wrap things up, what happens when a business decides to close up shop? You can't just lock the doors and ghost the government. There is a strict sequence to legally retire a business. First, you have to submit a sworn statement of your gross sales or receipts for the current year. Second, you must settle the tax difference for that current year's gross sales. Believe me, local governments will always collect their final dues before letting you go. Only after that tax is fully paid is the business officially considered retired or terminated.
Wow. Okay, we have filled all 5 mental folders. Now I want to leave you with one final, provocative question to really test those connections. If your principal office is located in a metropolitan Manila area municipality and your factory is in a highly urbanized city, how do you combine the 30/70 allocation rule with the 50% rate premiums allowed for both of those specific LGUs? Think about the mechanics of that. Think about how these folders interact with each other. If you can combine these concepts and practice drawing out that scenario, this study session will literally stick with you for years.
Keep studying smart, keep those mental folders organized, and you are absolutely going to crush that board exam. See you on the next explainer.